You're listening to the Ottawa Homeboys podcast, your go-to source for Ottawa real estate and everything in between. Now, here are your hosts, Aboozar Sheikhi, Burton and Ahmad Hage Hassan. This podcast is about the real estate market in Ottawa and housing advice. But the advice may not apply to your situation. Contact the Homeboys or any licensed real estate professional for specific recommendations before you make decisions about your real estate needs.
Welcome to another episode of Ottawa Homeboys. I'm Aboozar Sheikhi along with my colleagues.
Burton, nice to be here.
Ahmad, Hassan.
And we have a special guest, Keenan. He's an advisor, financial advisor. And I feel like now more than ever we need advice just because of the market uncertainties and so on.
Yeah, definitely.
And we'll go around, talk about what we're doing real estate-wise with the boys, and then we'll get into your field of business,
okay.
And you can explain what you do and how things are. And one thing to know, Keenan, is that make sure you let everybody know that the best investment is real estate, man. There's no.
I will. All I do is sell REITs, actually.
Nothing else but real estate.
Okay.
No, I'm just kidding.
Awesome. Well, thanks for having me.
Yeah,
seriously.
absolutely. Yeah.
Thank you for having me.
Joining us. And how you guys been? What's the
Pretty
week for you
good.
guys?
Pretty good. Yeah, for me, it's I've been doing a lot of outbound prospecting. Been reaching out to agents in Toronto and just kind of introducing myself and connecting that way. Just really trying different avenues of lead generation. As you know, in this business, there's not one source of lead generation, right? You could do online marketing. You can go to networking events, door to door.
Door-to-door, for sure.
Love the door-to-door stuff. It's too cold out there for now, but we'll get back into it, Dan?
Yes, sir.
Soon enough. So yeah, I've been having some great success with that, having some really great chats and conversations, and getting to know a little more about the Toronto market too, which is pretty cool.
Interesting, yeah.
Yeah.
Cool.
Awesome. No, nice to be here, boys. Thanks for jumping on.
Yeah, anytime. Thanks for having me. I'm very excited.
Yes, sir. Week's been good. Have a lot of different stuff on the go. Got a nice listing that I just brought to market Monday this week. That's the one overlooking Lansdowne Place. Pretty excited to bring that to market. Really nice area. Love the glebe. Everything's walkable. Rideau Canal's right there, right? And then I have two in Findlay Creek that have just come up as well. So nice. Both of those are for rent. One's a townhouse, and then the other's a nice single-family home. Facing the park. Really nice floor plan with this one. There's a nice 18-foot ceiling. So main floor feels really spacious and bright with the big window back there, everything. Lots going on with that side of things.
How much is that one going for rent, by the way?
So the townhouse in Findlay Creek is $27,000 excluding utilities, and then the single family home is going to be $37,550 excluding utilities, and we can furnish that. So partially furnished will add some value there too.
Nice. Very cool. Awesome.
Yeah. How about you?
And I've been a couple of listings. The townhouse we had at Beaumont ended up getting, after 20 days, multiple offers all of a sudden.
Yeah.
Anything below 400, I feel like that's the sweet spot.
Exactly.
So in the conditional period now, which we'll see what happens with that. New listing coming on in the West End, close to the Andrew Hayden Park there. It's a condo complex, 12 course down, and that's pretty much main floor duplex. We can't say duplex. It's not New York, but it's a very interesting concept, condo where you have the main level, the stairs going up, 2 bedrooms there, full bath, and it's got an underground tandem parking as well, which I think would be a great selling feature for whoever's looking to buy. And we're close to the 400 range, at 418,000. Jesus, it's one of those days. 418,500 is the list price, so that should be going up in the next day or two.
That building's a hidden gem.
It very few listings come up in that, and the condo fees are fairly decent, I find, considering the age. You're looking at about $590 per month, which for a 2-bedroom and in that
good
style and the area, I feel like it's we'll see what happens, but
awesome.
But that's for me. Yeah.
Awesome.
Keenan.
Yes.
Your turn.
Yeah. So just want to say it's a pleasure to be
Thanks
on.
for coming.
On Ottawa Homeboys podcast.
Glad to have you.
So for me, been a bit of a slow start to the year. it's we're actually coming out of RSP season right now. This year, in terms of contributions, it was a little bit on the lighter side. A lot of that has to do with a lot of the uncertainty right now in the market. I'm more of a long-term investor, and that's kind of like the advice I use with my clients. What we're kind of seeing now is, as you'll notice, with all the geopolitical stuff going on in the Middle East, right? It's creating a lot of uncertainty. Overall, the economy as a whole has slowed down a little bit. What we're actually starting to see in Canada is, in terms of what we do, is we call it asset allocation, right? So when you're looking at an overall portfolio, it's kind of like using a don't throw your eggs all in one basket mentality, right? So like when you invest, you want to have, US, Canada, emerging markets, Europe, etc. So back and up until about a year ago, the majority of portfolios were kind of allocated in the US. So when you're looking at, let's say you have $100,000 and you have a pure equity, so stock portfolio.
And that's what I want to know, like to really, really bring it down for us to the basics, right?
Basics.
Basically, personally, I have no clue. Let's put it that way. And I have 100,000 saved. Is there a minimum I can come to you with? If not, what's the minimum? And then how do I start and where do I go from there?
Yeah, so in terms of minimums, there's no minimum investment with me. Depending on kind of like what your goals are.
Right.
The first thing I look at with any client is, what are your short, medium, long-term goals? Typically speaking, when you're investing, to be very basic, if your project, the first thing I want to look at is your project, right? So could mean buying a house, it could mean putting education aside for a kid, it could be retirement. They all go hand in hand, but the first thing I ask is what's coming soon, right? So for example, if you're like, okay, I want to buy a house in 2 years. Well, there's different ways we can do that, right? So number one, leverage the FHSA. There are RSP options, but what I would say is focus on the short-term goals first. Allocate that 100,000, the majority of that towards the house. So what I would do is, in terms of the short-term investment, I would go more into cash, something that pays a guaranteed return. The reason for that is there is volatility in the market.
Are you referring to currency? Like when you
No. So like, sorry, when I say cash, I mean like savings accounts, GICs, anything high yielding. So like when I say high yielding, you're looking for capital preservation. So what capital preservation means is you're looking to have money put aside, but you don't want to lose the money, but you also want to earn a little bit of interest on it. So the challenge with that though is right now interest rates have come down quite a bit. If you're looking back to, I won't get too technical, I promise.
Yeah, please.
No, I promise.
I'm keeping up to this point.
Yeah. So
far,
basically,
so
low interest. So basically, to sum it up, there is the prime rate, right? The lending rate.
Yeah.
So what happens is as that prime rate goes down, your interest rate on guaranteed investments goes down as well.
Yeah.
So a lot of people are like, oh, I want to make 7, 8, 9, 10% in 2 years. I'm like, okay, well, do you really want to have your money in the market and have a risk of losing money, right? I don't recommend that. So like I said, for short term, you're typically looking at, right now, prime is at, believe 4.45. So if you're looking at a high interest savings account, depending on what your institution is, you're probably looking at like, banks typically are pretty on the low side, usually about 0.6. My recommendation for high yielding savings accounts would be Equitable is very good. I'm not going to get too product specific, but Equitable actually has the highest interest rate right now. My company offers a pretty competitive rate as well. Once you kind of get past that 2-year time horizon, maybe 3 years, you can start looking at more things that go into the market. Like I said, if you have 100,000, what we would figure out is, okay, what do you need for that down payment, right? So obviously as a first-time home buyer, the minimum is 5%, right?
Yep.
What you need to be careful though is if you're buying with a 5% down payment, you're going to have CMHC fees by default, right? So a very important thing that I talk to clients about is their budget, right? If you have, a large mortgage and you only have 95% of that property, so it's called loan to value, your mortgage payments are going to be very high, right? So again, if you could aim for 20%, great. If not, no problem. make sure you have, when you look at a monthly budget, you want to have enough money for your mortgage, your property taxes, your condo fees, right? If you're looking, past that 3-year mark, you're kind of looking more into the market now. So out of that 100,000, let's say we need 50,000 for a down payment. I take that 50 grand, throw it directly into a savings account, something safe. Then what I would do is I would start allocating that other 50,000 towards other things. So like.
And now, would this be locked in for a period of time? Is that how is it time sensitive? Or?
It depends on the investment, right? So in my opinion, right now, it's not worth locking your money in just because rates are not great.
Okay.
If you're looking at a GIC, a guaranteed investment certificate, then yes, your money is locked in for a duration. But if you're looking back to like 2 or 3 years ago when you were getting, 5.5% guaranteed, I mean, that's phenomenal. Lock your money in now, right? Now you're getting pretty much the same, maybe a little bit higher on a GIC, but I don't like have the idea of having your money locked in at a low rate.
Okay.
So Keenan, if I was looking to buy a house in something like the next year or 2 years or 5 years, like when would be the best time to have that conversation with you so that I know what money moves to make? And then say, for example, now we're outside of the real estate context, are there other typical client profiles that you work with? And like, when should somebody come to you, and like what exactly would you be helping them out with?
So what I would be looking at is, not just setting up the down payment. Like again, if you have the down payment up front, great. We can optimize that. But in terms of like, client says, oh, I want a house in 5 years. Okay, we need to get to that 5%, for example, right? So what I would be saying is in terms of investment vehicles, so like that's kind of what you have. So like your TFSA, your RSP, your FHSA, what makes sense to the client, right? So I always typically will start off with an FHSA. The reason for that is the contributions are tax deductible like an RSP. The beautiful thing with FHSA though is it's not just for that tax year, it's tax deferred for up to 20 years, right? So if you were to bring me a client, we would first look at, okay, first thing I start with is a budget, okay? What do we need, what's your monthly surplus, right? After all your expenses come out, all your, you might have childcare costs and stuff, right? So again, building a budget is crucial. Once we have a budget, we can figure out, okay, we need to generate $50,000 in 5 years.
And I feel like, as realtors, we at times come across leads that it may not generate right on the spot, but having this sort of a contact with Keenan, for example, is just building some sort of a structure so that if we're even a year or 2 year out, we can basically start planning this.
Exactly.
We will get credit for this because of this setup, and then eventually they may end up purchasing a home as well.
Some of these accounts are huge as well too, man. Like I love that you touched on the FHSA right away. I think that's a really nice product that's out there for first-time home buyers. And then the TFSAs, what you can do with TFSAs is so versatile.
100%.
And even RSPs and more. So like in an age where home prices are the way that they are, why not take all of the financial advantages that I can to get into the market for the first time? Because the first one's the toughest, right?
For sure, that's it.
Keenan, just to ask you a quick question. You said the RSP contributions are lower because of geopolitics. Like, what's the reason behind that? Why are people more reluctant to look into long-term savings for that?
So, in terms of the RSP contribution limits, they are kind of set on your income from the previous year. But in terms of like, what I'm noticing with a lot of people is they're very emotional. When it comes to investing, people are very emotional, right? So what they look at is the headlines in the news, right? You might wake up one day and go into CTV and say, oh, not a good time to invest. This is happening or this is happening, right? If you look at the underlying fundamentals of the market, they don't actually the economy does have an impact on the stock market, but it's not directly correlated, right? So again, you may have high inflation, right? You may have high interest rates. It doesn't necessarily mean that the market's not going to do well, right? But the problem with people is also to give you an example, we've had 3 really, really good years of returns on the market, right? If you're looking at the U.S. markets as a whole, the S&P 500, it's the 500 biggest companies in the world are traded there. You're looking at about 78% over 3 years. Okay, like that's phenomenal, right? So a lot of people are kind of building in their head now. They're like, well, no, it's done 70%. It's bound to crash eventually, right? We are going to have downturns along the way.
Yeah.
We're also getting into this AI thing right now, right? Where a lot of big tech companies are pouring all this money into AI. We haven't seen the impact of it yet because it's a long-term investment, right? We're in the early stages of AI. So you'll notice this with a lot of baby boomers, right? So our parents, like people that are in their, 65, 70. I don't know the exact year. I think it's 19. I don't remember the exact year of baby boomer, but those people lived through the tech bubble, right? I don't know if you guys remember Nortel.
Yeah.
So yeah, there was a big Nortel crash, right? This is when the internet was getting big, right? People didn't understand what was going to happen. Now the world runs on the internet, right? The main difference now is these companies have actually grown exponentially. Like you're looking at Google's market cap, so that's what it's worth. You're looking at about $3 to $4 trillion right now, right? So again, what's going to happen is a lot of these AI companies are going to fail, but if you stick to like the big blue chip companies, you'll do well. But it's just a lot of noise, right? It's like also with the new, not being biased or anything, I won't talk about politics, but what we've really seen is with the new administration as well as there's a lot of noise coming out, right? Yeah. What created a lot of uncertainty last year in April was tariffs, right? Tariffs have been used as a negotiating tactic with the U.S., right? Anytime the word tariff is said, the markets dip. It's just been the new normal, right? So to answer your question, the first 6 days of last year were much busier. The tariffs didn't really roll out until April. So between April and now, people have just been kind of like very uncertain.
It's the emotional.
It's very
sentiment,
emotional.
and
It's very
then
emotional.
Whether it's relative or not,
Exactly.
remains to be seen initially. But it is
Yeah.
not. It's emotion driven. Right?
Yeah.
And you guys know what's guaranteed to never be tariffed is investing in Ottawa real estate. So
There you go.
just reach out to us and Keenan, and we'll guide
there
you
you go,
in the right
man.
direction.
Yeah.
Yeah. But yeah, so like again, just to kind of summarize everything. So like I don't know if you guys follow Warren Buffett, but he is the most successful trader of all time, okay? He has basically averaged 20 to 30% rate of return for over 60 years. His main thing is never sell, buy when people get greedy, right? He'll sit on the sidelines with hundreds of billions of cash and go in when he wants, right? And if you actually look at the market last year, we still made a good return. Most of my clients call me, they're like, I lost money last year. I'm like, well, no, actually look at your statement, right? So again, like you said, it's very emotionally driven. So,
Do you think it still has any, connection with the fundamentals? Like it just seems like some of the valuations, especially with AI companies, where it's like one company is buying AI from another company and then they're buying it from another company. It seems like there's a bit of a loop going on right there. I'm curious,
yeah, valuations are very high. What's really interesting about the markets these days is fundamentals obviously play a part, right? Since their self-directed trading has come out and social media and influence, there's companies, every single tech company is overvalued on paper, right? Where it gets tricky is you have people out there that are able to influence the market on a dime, right? Elon Musk, I don't know if you remember Dogecoin, for example.
Yeah.
Right? Elon Musk went on Saturday Night Live and drove up the crypto 45,000%, right? So what we're seeing more than ever is fundamentals are not actually working as much as they used to because of a lot of the time now, markets are based on speculation.
Yeah, it's based on hype.
It's hype, right?
If somebody is a big shot player and they, they say
And
this
now more
one
than
thing,
ever, we could say.
And it's sad. It's crazy because
big thing with this AI tech stuff,
Yeah.
right? It's the same thing. Like everybody's talking about AI replacing white collar jobs, replacing different fields, and then you have a bunch of money being poured into it. But really, like I see a lot of value in AI for sure, but there's tons of limitations. Like
100%.
I feel like it's the competition between those companies, the speculation of what's to come. Again, it might not be exact same thing, but we had a similar feel with the cannabis. Right, with all the cannabis, all of a sudden got unleashed. That was a similar feel.
Tons of those companies burned out, man.
To an extent as
EVs,
well. I remember
Yeah.
EVs and
That's
EV
it.
charging was buying the shovel and not the gold,
Exactly.
right? So
Yes, cannabis especially, and this is a perfect example of speculation, right?
Yeah.
you look at a company like Canopy Growth. I can't remember how much it was, but like I think it went up from like it was a penny stock and it went to like $200 or something crazy, right?
Yeah.
Now it's worth like $2 or $3. I haven't. Don't quote me on that. I haven't looked in a while, but
Yeah.
It's down there.
yeah, or like EVs, right? Like with Tesla, there's a company called there's this Chinese EV company called BYD, right? So they build EVs that are a fraction of the price that have the same technology as Tesla, right? So again, like for example, the liberals were like, oh yeah, by this day we want every car to be EV. I mean, it's not realistic. You're noticing more of an increase in hybrid purchases now, right?
So if anything, don't follow what the market says and connect with someone like Keenan that knows what's going on and knows how to actually, I guess, make your money make sense, right? Like you'd work with people with different profiles, whether they're young,
100%, yeah,
middle age, or looking at retirement, and sort of work in the right direction with that.
Yeah, and like the biggest thing is to me is like again, I spent 6.5 years at the bank, and like my problem is again, I'm not taking a bash at the bank. They're great, right? But what I've noticed is unless you have typically $250,000 in investable assets, you're not going to get that financial plan, right? So what I'm noticing now is a lot of clients are looking elsewhere because they don't know what's going on, right? It could be, like I mentioned, I won't get too technical, but there's retirement strategies you have to use. When to draw from your RSP when it makes sense, how much money you need to retire. So again, building a financial blueprint is probably the most crucial thing. Anybody can open up a Questrade account or like an iTrade account and buy stocks, right? But there's no planning in that, right?
Yeah.
So
you get the classic Redditors that go online and
prime example.
follow the trends, and then boom, man, like it just takes one
for a side gig, it is for fun, whatever, hobby sort of, maybe, but if you're really now getting into realistically larger sum, where it could be lost overnight, literally at times, and without any sort of a structure and planning, it is just too much to take on. So you would need someone who knows in depth.
It's like anything, right?
Anything.
It's literally like any field. Like now you're buying houses and the prices are hundreds of thousands of dollars, right? Like, do you pick between this $500,000 house in this neighborhood with this finishes or this one? Like, what's going to be?
Yeah.
As much as people want to move there and live there and experience the lifestyle, a lot of people want to be able to sell that house in 5 years and make some money on that.
Yeah.
And which one is going to be the better value play at the end of the day?
Yeah.
For sure.
Yeah, exactly.
Yeah.
So what are you seeing going forward, looking at the next couple of years?
Honestly, what I see going forward is I still, recommend everybody have your money invested. A lot of things that people don't realize is you don't need a lot of money to invest. You can start off with like a small amount. It's called dollar cost averaging, right? So, for example, you get paid bi-weekly, throw in a small amount. It could be 50, it could be 100, it could be $200. Get your feet wet, start investing. Like we were saying, if you need an advisor, sit down with an advisor. A lot of people are also caught up on management fees, right? Just because you're paying a management fee doesn't mean you're not making money.
Is this per deal or annual? I just want to know how typically.
So the way it works is, let's say you're looking at investing with me, right?
Yeah.
So you're looking at a U.S. equity fund, so U.S. stocks. What happens is it's an annual fee. So I won't say fees obviously right now because they do change, but if you're looking at a U.S. funds, let's say that fund let's say the fee is 1.5%, for example, okay? Mm-hmm. And it does 22%. You're actually getting in your pocket 20.5%. What that fee includes though is it's getting paid to that expert. We have fund managers, so the fund manager to manage your money for you. So it takes a headache out of it. Also, what that fee includes is my advice, right? So what's going to happen in the next year or so, actually of the next year, clients are actually going to banks are already doing this, they're going to actually see how much they're paying in fees, right? So if that client's like, oh, I'm not getting good service, why would I pay a fee, right? So again, depends. It's an annual fee that comes out of the return. In terms of what I would say going forward, start with your financial plan, do a budget. Don't allow the markets to scare you because they are unpredictable. If you look over 100-year history, we've actually had a lot more market, like it's called the bull market. So
Yeah.
bulls when it goes up, bears when it goes down. We've had actually more bull than bear markets.
Yeah.
And it just, I feel like just swimming against the wave, you know, and that's what I say to some buyers who are qualified,
Yep.
steady job, you know, pre-approvals in place, and then the only thing that's holding them back is like, you know, I don't know what's going to, like, that's the perfect time. You know, there's no point of going for it when
Yeah.
everybody else wants it too. That's what happens when you have to fight for it, right? So I think that mentality, if that's transparent and that's realized, it will greatly enhance, you help them.
I love the line Keenan said, just as you were starting to answer the question too, of like dollar cost averaging, of
Yeah.
like starting with a little bit, because I think you can apply that to real estate as well.
Yeah.
Right? Like I think absolutely it's easy to look at the market, and even if everything's good personally, it's easy to be discouraged. But in general, like looking back, you can really sort of nail appreciation to a specific percentage amount. So if you look year over year over year of if you bought at that time or if you waited, typically getting in earlier is going to work better for you rather than waiting long.
And it's the
It
game,
does
it's
depend on
long
each
term. Yeah, I mean,
situation,
we're not
that's it.
saying like it's not a year or 2 year plan. You know, I always say like it's got to be five plus. So I'm not gonna sugarcoat it for you. I'm not gonna say you do this and then you're gonna get so much back if you sell your home. But at least you get in, you have power to negotiate.
Yeah.
You know, and just in a more of a relaxed environment, get where you can get without the hassle, right? And then eventually, when you hit that five plus mark,
Yeah.
5 year plus mark, there's just always
Yeah.
yeah.
And another thing too is I always say, and I think this goes hand in hand with real estate, there's never a perfect time, right?
Yeah.
You know, if you need to buy, you need to buy, I feel like, right? For me, it's kind of like that in my industry as well. It's like, there's never a perfect time to buy. The markets are going to do the thing, the real estate market's going to do its thing, right? So
The only perfect time would have been 15 years ago, or 20
There you
years
go.
ago, or now.
Or now, that's the thing. It
Yeah.
never ends. I feel like that
Yeah.
10-year cycle ish that we see this, you know, up and down sort of, and there's never a perfect time. You just go for it. And I feel like in my experience, people, buyers and sellers who were able to deal with the times have thrived in a sense.
Exactly.
They've lost, but they were able to get back and then buy something else. If they lost on a sale, they can get. I'm working with a
Yeah.
seller and a buyer now. They're doing both, and he knows he bought high. He's like, okay, I'm gonna get this minimum, but he's looking down the tunnel at the end of the light, the light at the end of the tunnel, sort of, seeing that he can take advantage of the market, because there's no way he could have gotten, for example, a semi at 550 about 2 years ago, 2 or 3 years ago, right? So I think that the mindset is everything at the end of the day.
Yeah, that's awesome, guys.
Yeah, it's great, man. And just like one last thing I wanted to say was, it's also piggyback off like what Keenan was going on about investing, not putting all your eggs in one basket, right?
Yeah.
Like, don't assume that if you're gonna buy a house and this is your only source of any sort of investment in 5 years. Speaking to Keenan, having some type of other investment plans in place, such as stock markets or GICs or what name you're expanding your portfolio,
Sure.
and you have more opportunities to win some, because there's going to be losses along the way.
100%.
On that note too, man, if you get pre-approved for a mortgage up to $1 million, does not mean that you need to spend $1 million.
Absolutely, yeah.
Keep it within whatever you're comfortable with. Look
Yeah.
at all of the monthly amounts that are going to come with that,
100%
and make
agree.
sure that there's some money left over.
Yeah,
So you have a bit
yeah.
of buffer room, right?
Absolutely.
And the sentiment nowadays, because of the inflation, living costs and so on, is that the good old days are gone. I feel, yes, it is difficult now, but it's not as bad as you feel. If you get structured and planned,
Yeah.
I feel like there's still a lot of room
Yeah.
to be successful, to have enough, to be able to do whatever you want, but you just need to know how. Right? So,
Yeah, and
Exactly.
it sticks to the budget thing as well, right? Like again, you can make it work, right? So
Yeah.
like if you're looking at your expenses, if I'm doing a budget for a client, some people eat out every day, or some people buy a coffee
For
every
sure.
day, right? So again, even like, or this is gonna sound crazy, but cut back on Netflix or like Amazon Prime, right? Instead of spending $20, get the ad plan for $8, right? So again, all these little things
Makes a difference.
Yeah,
Yeah.
it's like a snowball
Pick up
effect.
an investment book. Start
Yeah.
reading.
Yeah, exactly.
Read
So
about what's
again,
out there.
Yeah, budget is crucial, but like, also your goals and stuff. So
Absolutely. Well, thank you so much for
Awesome,
joining
boys.
us. It was a fantastic episode, and hopefully
to have
we'll
you
see you
on.
in the future episode, Ken.
yeah, thank you for having me. This has been great.
Awesome.
Awesome.
All the
Until
best,
next
boys.
episode.
Thanks for jumping
Cheers.
on.